Good afternoon. Good afternoon, everybody. Welcome to Paul's Monday Market Update number 223 for Monday, 27th of April, 2026. Hope you're all well. Hope you've had a good weekend. Hope you're ready for another eventful week in markets. It really has been quite some year, hasn't it, so far? Anyway, you're very welcome here. If you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you in the next 30 minutes, taking a look at strength and weakness within FX indices and commodities markets, looking at some charts of interest, okay, that you might want to add to your watch list, and then a look at the live markets. It is not a signal service. It's not trade recommendations. It is just me sharing with you what I'm looking at the moment, which might be of relevance or of interest to yourselves. As always, you're very welcome here, but just remember that you're always responsible for your own trading and investing decisions. And if you're looking for a little bit of help and support with your own trading journey, and you could do with a little bit of discipline, accountability, and consistency, well, you can join the VTP tag group, the Trader Accountability Group. There's a bit.ly code there or a QR code there, or you can ping me if you want a little bit more insight into that. Finally, today, before we switch over to the live markets, this is GDX. Okay, so it's the VanEck Gold Miners ETF. All right, so this is it's like a leverage play on gold, benefits from kind of rising gold prices and dollar weakness. Okay, generally. Because it's miners, well, you're looking at things like cost pressures. So energy, all right. If energy and labor becomes expensive, well, that has an impact on margins, all right. And even if there's higher gold prices, those cost pressures will have a big impact, right? But not unsurprisingly, as you can probably see, over the last couple of years, gold and gold miners in particular have been a bit of an interesting hedge against that kind of geopolitical risk, potential rate cuts, etc. But let's just look at the charts just a little bit more because, as I said, sometimes there's interesting elements we can learn from. You can see this weekly chart, it's been a fantastic trend once again, okay, just riding that. But, you know, what we got here into the start of this year was that is a big bearish engulfing candle. It's a big bearish key reversal candle. Price pushed to a new high, but it rolled over and closed beneath the low of the previous candle, all right? They don't happen very often, all right? They don't happen very often. And as I tell people, there's no guarantees in trading, but you know, if you're going to look for a good simple candlestick to focus on, to analyze and trade, well then key reversals are very good ones. And as I often say, if it's not the top is nearby. And actually, what we saw was, you know, as we went into the war, we did flush a bit higher, okay. But then what happened is we printed another one. Okay, we printed another bearish engulfing candle, bearish key reversal candle, pushed to new highs, but then rolled over and closed beneath the low of the previous candle. And then we fell away. We fell away. Okay. Then we had basically war off, risk on, back up to that sort of $100 level. But I wonder now, last week we kind of drifted lower and kind of just closed beneath that 20. And I'm kind of curious to see, is this a not a pretty head and shoulders pattern, but it could be, you know, a head and shoulders pattern on that weekly chart. And I'm curious, we've got the 100 number, we've got that 20. Is that 20 going to flip from being, you know, from having been support to now becoming dynamic resistance? In which case, then I'll be looking for price to work its way back down to this level around about $80. Okay, so you know, this is what we need to do with this is, of course, you're watching to see what the dollar is. You're also looking at what kind of real yields are like, because if dollar and yields fall, well, GDX can accelerate quickly, okay, versus the spot gold price. So we are in an interesting point here. It's an interesting decision point. And as I said, we're always looking to see what's the catalyst to move us, whether that be higher or lower. Sometimes it's abundantly clear which way it's going to go. Other times you're like, well, I need the catalyst. I'm going to see how it plays out. And then I'll look to join the trend afterwards, okay? I generally I know my style, okay. If unless it's abundantly clear which way the price wants to go, I'm generally quite happy to let the market play its hand, okay, make its move, and then I'll sort of try and ride its tailcoats, okay, coattails afterwards. That's the way I like to work with that.